QuickBooks Pro Desktop 2021 Payroll Liabilities form. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file. We currently have the home page open. You can open the home page by going to the company dropdown, selecting the home page. We also have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list, and seeing whether or not you have this little collapse caret open or close to open or close the open windows. In prior presentations, we've been taking a look at the custom or the employee section, the employee cycle, the payroll cycle down below. Last time we focused in on the paying of the employees, which of course is going to be the major component of the cycle. But when we looked at the paying of the employees, we noted that we would be then withholding taxes from the employees that we would then have to pay at a future point in time, those increasing the payroll tax liabilities. And then we also had our employer portion of the payroll taxes that we would then be paying. When we pay those payroll taxes, it's nice to have that set up within QuickBooks and use the little QuickBooks widget to do so. So this little icon will help us to process and pay the payroll tax properly. Again, payroll taxes will be similar to some of these other widgets that we have up top, like the bill pay up here and the manage the sales tax type of item as well, in that it will result in basically a check type form, not necessarily being an actual check, but the check form being the form used to decrease the checking account. So when we use this widget, we'll be paying off the payroll liabilities, which will then basically make a check type form, but a special check type form that will be indicated within the system, indicated when we look at the transaction detail in the general ledger or GL detail, so it will know exactly that we used that widget. So obviously, let's take a look at where we left off last time. If I hit the reports drop down, company and financial, and we take a look at the balance sheet report, changing the dates, I'm going to go to customize up top, change the dates from 01/01/21 to 12/31/21, January through December 2021, and say okay. We're focusing in on the item down here, which is the payroll liabilities. Within the payroll liabilities, if we double click the payroll liabilities, then we saw that this is going to be increased. The liabilities are going to be increased with the paycheck. For example, we have the paycheck here for Adam we analyzed last time, and it was increased by these amounts for this one particular employee for this one payroll period. If I double click on that item, we go back to the paycheck. If we then open up the detail for the paycheck, we see what's actually happening here for this employee. We have the salary of the $4,583, and then we had what was taken from the employee. So these are the employee payroll taxes for the federal payroll taxes, which include the employee's federal income tax, FIT, Social Security. FIT is the federal income tax, Social Security, and Medicare, resulting in Adam only getting $3,112.70. So Adam earned $4,583, but only got the checking account went down by us processing a check to the employee of the $3,512. So this difference then is not our money, it's Adam's money. So it's not our money, it's Adam's money. We were required to take it from Adam in order to pay the government for Adam's payroll taxes. And this over here then is going to be our taxes. So this are going to be our taxes that we have to pay over and above what Adam earned. This is not Adam's money that we took from Adam. This is money that we are charged by the government that is based on the earnings of Adam. So this is the amount that we have to pay over and above for the payroll taxes. So this then, every time we process payroll, we're going to have an increase in the liability because we're going to have to collect the taxes and be charged the taxes, and then we're going to have to pay them at some future date. So in our practice problem, we said that we paid people monthly, and then we're going to have to then pay the payroll tax sometime in the following month. How often you have to actually pay the payroll tax after the submission of the payroll will depend on your circumstances, how large your payroll is, and so on and so forth. But logistically, obviously, whether you pay weekly or bi-weekly or monthly or semi-monthly, then after the payroll period, you're going to be assessed the taxes for the employer taxes, and you're going to be taking money out of the payroll checks of the employee, which then you're going to have to, of course, pay to the government at some future point in time. Just a quick note on this too, if you have a cash flow problem, if cash starts getting short in the company, there's a problem, then oftentimes payroll taxes in general become difficult to pay. You do not want to not pay typically the payroll taxes, because if you don't pay the payroll taxes, it's basically like the IRS can see it as you taking money from the employees, right? Because this basically represents you taking money from the employees, but you're doing so by law to pay the government. If this money comes out of the employee check, meaning they get the net check for this instead of what they earned, and you don't pay the payroll taxes, then not only is that not really paying taxes, but it can be seen as stealing from the employees, basically, right? Because if the money's short, payroll short, or there's a cash shortage, you typically don't want to, not pay the payroll taxes, because it can double complicate the problem more than just not paying your own payroll taxes, which could be different. So anyways, I'm going to close this back out. I'm going to be closing this back out. And so that is going to be the increase. And then, of course, we'll pay the payroll taxes at some later point in time, which we will do with that widget. So then at some later point in time, I'm going to go back to the Home tab. We would then run this Pay Liabilities widget, which will help us to process the liabilities. So it says select the date range for the payroll liabilities you want to pay. Base your dates on the dates of the paychecks you issued, not on your pay periods. So I'm going to say that the check was issued on 02/28/21. So that's when, and notice what they're saying there, there's a difference between the dates. Let's just kind of review that real quick. If I go back to the pay employees, there's two dates that could be involved when you pay the employees. One is the pay period end, and you could actually then process the check a little bit later. So if I pay people monthly, the pay period end for the February month would be 2/28, but I may not pay them till like 3/03/21. The actual check might happen here. So when the actual check goes out, that's what's really triggering the calculation of the payroll liability. It's when the check is issued, not the end of the pay period. That's what they're saying there. So I'm going to close this back out. I'm going to say OK. I'm going to go to the Pay Liabilities. And then it says the custom date. So we would say the date then being, so we actually issued the payroll. So I'm going to say 02/01/21 to 02/28/21. In our practice problem, we actually issued the paycheck at the end of February, the date of the check and the date of the pay period being the same in our practice problem. And then we would go through this little widget, which would help us to process the payments of the check. So up top, then we can print the check just like all the other items. If we're actually going to physically print the check, then we can check that off, and we'd have to have the pre-printed checks that we would put into the printer. You can't just print a check on a blank piece of paper, and we'd go through that process of printing the checks. But if you're electronically entering the checks, then you'll still use like a check type of format. Again, the form of the check is what is going to be used to decrease basically the checking account. We have the banking account down here. It's going to be coming out of the checking account. Note that oftentimes companies may set up a separate checking account for payroll to process the checks through payroll, so that they actually just put money into the payroll checking account right before they process payroll, then process payroll, and then just take the money right out again. The reason they might do that is because payroll becomes an area where there's a high degree of likelihood that if there is a problem, like a liability problem, that it's going to be with an employee or something like that. So if you have all the paychecks in one checking account, then it might be easier to kind of sort them and figure out any problems you might need to take care of. Then the check date, you're going to have the date that you make the check. It will default to today's date if you're running in the real time, of course. And then you could sort the items down below. The dates, we have the dates that we just entered up top. Then it's going to calculate the items that you are going to be owing, and these are going to be pulled from, as we saw, basically the data that was input into the payroll item. So the federal withholdings, that's the employees. Federal income tax, it would include all the employees. So if you think of all the employees of like one employee, then this would be the federal income tax that we took from them, that we did not pay them even though they earned it. And then we've got the Medicare for the employer and employee, Social Security for the employer and the employee. We can then check these off, and it'll help us to process then the payroll checks. Now, obviously, if I go back to the balance sheet, we're simply just writing a check or making a payment here. So you might say, why don't I just write a check? Isn't this just the same thing? I can just basically write a check. Well, note that you want to use kind of the widget. You want to use the widget generally when you set up the payroll, because it's less likely that you're going to make an error if you run through everything properly and use all the little payroll systems that QuickBooks will have to set that up. So it will simply generate a check, but you typically want to go through that process. If you just write a check to this account, you can do that, but then now you've kind of messed up the normal payroll process system, and that could cause you problems basically in the future. So once you run this check, if I double click on this, then of course these liabilities are going up as we process the checks. As we see in January, we process these checks at the end of January, and then when you run that little widget, you're going to basically make a check down here, but it's a special check. It's going to be a Pay Liabilities check. So it's still, if you double click on it, looks like a check, but then at the bottom of it, it's got this special Pay Liabilities tab down here, which helps you to indicate that this is a check that's going to be, that was run through that basically widget for the Pay Liability widget. So I'm going to close this back out, The other side of this, of course, would be on the checking account, and the checking account, if we saw the check for the end of January for, it's the paycheck check. Let's see. There it is. No, that's the paycheck. Where's the check for? Here they are. They're the liability checks. So these liability checks, then we paid in February for the payroll that was processed in January. They're going to the IRS. Again, they look like a check. If I double click on them, they look like a check, but they give you that special indication so you can find them easier. So I didn't find them that easy, but you can find it easier that it's a payroll check in the data, or paying off the payroll liability check. Whereas it looks similar to like a normal check, this being like a normal check that we just simply entered into the system, that has just the expense tab at the bottom, and we just name an expense account, as opposed to the special liability check, which then has the bottom point having this special tab on the right hand side to issue the payroll item. So I'm going to close this back out. If we go back to the home page, that's going to be the basic process for payroll. Again, payroll gets quite complex, so we will talk more about payroll when we run through it in the practice problem and actually enter the data for it in the second half of the course. We also might add some more added information for payroll after the whole practice problem to focus in on some of the specific topics related to payroll at that time.